Hi everyone, my name is Desiree Anderson and I am a CPA at Anderson Accounting and Tax. I help cannabis businesses achieve their financial goals by maximizing their profits and minimizing their tax liability. Today, I'll be discussing 5 things to consider when choosing a business structure for your cannabis business. Now, there are many factors to consider when deciding which business structure is best suited for you and your cannabis business. Now, sometimes there may be a particular reason why you want to use or choose a specific type of business structure, but it's important to understand the advantages and the disadvantages of each one. So, here are 5 things to consider when choosing your business structure. Okay, so before we get into the 5 things that you need to consider before you select a business structure for your cannabis business, let's first talk about what your options are. So the basic options are either a sole proprietorship, a partnership, an LLC, a corporation, or you can elect to be taxed as an S corporation. Now, the simplest form of business, of course, is the sole proprietorship, because with the sole proprietorship, there is really nothing that you have to do in terms of registering your business with the state. You pretty much just wake up one day and decide you want to start a business, and then you can just get started. Now, of course, that's outside of what's required for the licensing as it relates to being a cannabis business, because as you know, being a cannabis business or having a cannabis business is not the same as having an ordinary business, in the sense that an ordinary business, you can literally just wake up and just get started. With a cannabis business, it's a bit different. You have to have a whole lot more planning and money involved. But then there's a sole proprietorship. The partnership, two people just decide, okay, we're going to start a business. There's nothing formal. Let's just get started. Usually that will be considered a partnership. And of course, once again, that's definitely not advisable if you are in the cannabis space, because you want to make sure you have all of your I's dotted and your T's crossed. And then we have the LLC. So LLCs, that's the form of business that most people choose in today's world. Okay, so if you are a sole proprietor and you register your business with your state as an LLC, then you will be considered a single member LLC. If you are a partnership and you register your business with the state, you'll be considered a multi-member LLC. And then, of course, there's the corporation. And electing to be taxed as an S corp means that, so when you elect to be taxed as an S corp, that's not technically a business structure. That is just a tax election. So a partnership, an LLC, whether it be a single member LLC or a multi-member LLC, and a regular corporation, which is called a C corporation, can all elect to be taxed as an S corporation, meaning that in the eyes of the state that you are registered in, you will still be an LLC or a multi-member LLC. However, the way that the IRS is going to treat you, they're going to treat you as an S corporation. Okay, so one of the main things that you have to take into consideration when you are choosing a business structure for your cannabis business is your ability to raise capital. Now, keep in mind that we're only talking about 5 things to take into consideration, and this is not all encompassing. There are other items that you will also need to take into consideration when you are choosing a business structure. However, we are just going to focus on these 5. So your ability to raise capital is very important, because as a cannabis business, whether you are a business that has been around for a couple of years, or if you're a startup, at some point you may have the need to raise capital. So your business structure is going to be a huge factor when somebody is considering investing in your business. And one of the reasons is because if you are a C corporation, usually it's a lot less complicated versus if your business is a pass-through type entity. If it's a pass-through entity, the person investing money in the business has to take into consideration the possible tax consequences of their investment. Okay, and most people or most investors don't want to have to deal with that. It's a lot cleaner, it's a lot easier when you are a C corporation, because there are so many factors involved that makes it a lot more beneficial on the part of the person loaning you the money or the entity investing when they are dealing with a C corporation. So keep that in mind. Are you trying to raise capital? And at what point in the business do you want to raise capital? Now, when you first get started, if you started out as something other than a C corporation, and then you start to grow and you start thinking, okay, I want to start raising capital, you can change from let's say from a single member LLC or from a multi-member LLC, you can then change your business structure to a corporation. So that is possible, okay? But keep that in mind. It's very important to think about these things before you choose your business structure. The second item is tax treatments of the entity type that you choose. If you choose a C corporation, then keep in mind that you will be dealing with double taxation. On the other hand, and that is somewhat of a disadvantage, however, C corporations have other advantages, that may trump the fact that you're being taxed twice. On the other hand, if you are a pass-through entity, then all of the profits and the losses pass from the business onto your personal return. Now, where this is a problem, and under normal circumstances for your average business, this is a great thing because you're only being taxed once and you are taking advantage of any losses that the business has, and you're using those losses to possibly reduce your other income if you have more than one type of business or if you have multiple streams of income. But as it relates to the cannabis business, because it is still illegal on the federal level, you want to seriously think about the way that you are being taxed because of 280E, cannabis businesses cannot deduct ordinary business expenses. And because you can't deduct ordinary business expenses, what's going to happen is on paper, your business may have had a loss that year. So when you include your cost of goods sold and you include all of your ordinary expenses, your net income, or rather your net you may have a net loss rather than a net profit. Okay. Now, if you were an ordinary business, you can transfer that net loss to your personal return and use that to reduce your overall income. But as a cannabis business, okay, the operating expenses are kicked out. So you are not allowed to use that when you are computing your net income on your tax return. So what does that do? That means that if without the operating expenses, you happen to have net income, then that net income is then passed through to your personal tax return. And now you are paying taxes on phantom income. Phantom income meaning that you really didn't make any money because on paper you had a net loss. However, when you exclude your operating expenses, it appears as if you had a net profit, and therefore you have to pay taxes on that net profit that you never received. Okay, so keep that in mind when you are choosing a business structure. You want to know, how am I being taxed and how is it going to affect my overall individual tax return? The next thing to take into consideration is the separation of ownership and management. So if you want to be in total control of your business, so in other words, you don't want anybody telling you what to do, you want 100% control, then you may consider, or you may choose to go with a single member LLC. Okay, that puts you in total control. Even if you went with a multi-member LLC, which is technically taxed as a partnership, you can still you can still have partnership agreements to give you majority of control. So in other words, you have control over how much control you have in the business if you are a sole proprietor, or rather if you are a single member LLC, or if you are a multi-member LLC. Now, if you are a corporation, on the other hand, then the ownership, it all depends upon how many shareholders are part of the corporation. Now, for a regular corporation, let's say for a C corporation, for example, you may start out as the sole shareholder. But keep in mind, as the business starts to grow, then you may lose your ability to control what happens. Because as the business starts to grow, then you start dealing with boards of directors. And normally the boards of directors are the ones that sort of steer or navigate the corporation. As your corporation starts to grow, then there is a separation, or rather a separation between the owner and the management becomes a factor. So in addition to the board of directors and management, you will lose some control as it relates to the business as a whole. Now, the next thing is transfer of ownership. If you are a corporation, it's a lot easier to transfer ownership because all you have to do is sell your shares. Okay, you sell your shares from one person to another, and that's an easy transfer. If you are a single member LLC, then usually you have to sell the entire business. So you sell the entire business, and if somebody is willing to purchase the business, that is about the only way that you can transfer ownership from one person to the next. If you are unable to sell the business, and for some reason you have to get out and you have to quit, then you just have, your only option is to shut the business down. If you are a partnership or a multi-member LLC, yes, you can sell your interest in the partnership, but keep in mind if there are only, let's say, two partners, and one partner decides that they want to bail, well, then that means that if that particular partner is not able to sell their interest and they leave anyway, well, automatically the partnership has to dissolve, because of course a partnership means two or more people. And then also, depending upon, even if you have 3 or 4 partners, depending upon what each person's interest is in the partnership, if one person decides to leave and if they have a certain amount of interest, there could be a technical termination. Now, finally, let's talk about the limited liability protection. Now, I don't really like talking too much about the limited liability protection because this is an area for an attorney. So I always advise my clients that you want to speak with an attorney when it comes to your liability protection when you are starting a business. Now, we as accountants, we can talk to you about the tax consequences of your choice, and the attorney will talk to you about the liability protection. So in short, usually a corporation carries the least amount of liability, and that's because a corporation is separate from its owners. So if somebody should come in and sue the corporation, usually they cannot gain access to the assets of the shareholders. Now, that being said, there are some ways around that, and that is what an attorney will talk to you about. Now, also the LLCs also provide the same protection as a corporation, except the advantage of the LLC is that you're getting the protection, but you're not having to deal with double taxation. Okay, so that's the advantage of a liability LLC, and that's why a lot of people choose LLCs, because they're getting the protection and they're only being taxed once. So when you are, and it's important, very important, if you're in the cannabis industry, that you pay special attention to liability protection. So my advice in that case is to definitely speak to an attorney. That way they can tell you how you can pierce the corporate veil. Even if you are a corporation or if you are an LLC, what can you do to where, for some reason, the owner can now be held liable? Okay, that is something an attorney will talk to you about. Okay, well, that's all I have for you. Feel free to reach out to me if you have any questions. My contact information should be somewhere below. Have a nice day.